Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 345 edition of Investdata Trading Academy live with Ambrose. I would say that there is a global bear shock as we speak at this hour in the market, despite there's also a mistrend in some market because we are seeing that Asia market is already in red. That of Europe is not left behind. Why US market is looking up marginally and Africa is also missed. And if you look at what is happening down here in NGS this hour, NGS is slightly in green. It opened in the red this morning, but at this hour, we're seeing it in green. Good news, but I'm going to sustain to the end of the day. That is very, very important. We want to know as we go into the discussion, we'll see because we're going to see the market live and know what is going on as we speak. But right away, I want to look at what is driving this global bearish shock as we speak. The central banks of the world kind of cautious stance or statement or disposition have set the market in this direction. Why we are seeing that some treasury be in the same market or what we call them treasury in some market are hitting their peak right away just because of the statement from Wednesday to today, knowing that today is the last trading day of the week. But one thing that is very obvious that as we are seeing this hawkish stance or statement or discussion, as I said earlier, driving some market into the red, there are some industries and sectors that also showing also strength. We're seeing also funds flowing to that industry in this matured economy. As we speak now, look at what is happening in Asia market. Asia market has moved on a flat, no ranging mode right away at this hour. Now, as the market also continue to look at the rising interest rate disposition by saying that the chairman of saying that although a higher and a longer interest rate coming to 2024 already they're already factoring it in, knowing that in the month of November we're going to see rate hike to the way it's going, unless we see a reversal and positive economic data. Looking at what is happening in the commodity market, we're not seeing that inflation started extending its cooling rate. We saw in some domain like we also saw in UK. That's why the Bank of England also hold their rate track. But Bank of England their rate track is also a good thing. But all eyes at this hour are looking at what will be the global purchasing manager index to show, because we're already seeing kind of a disconnection or call divergence between the manufacturing sector and the service sector in terms of what activities. That is what should also guide investors. If globally we're already seeing divergence between manufacturing sector price index, what we call a purchasing manager index for manufacturing sector, and also the same thing for the service sector. It also gives you a clue what is happening around the world. Where is fund going? Because if cost of production is high, would activities continue to improve? Because most of the companies activities are slowed down, and that's actually reflecting on this global world. Global purchasing manager, we are seeing that most economy are below 50 basic points, which you know that when a company a data coming from this sector is below 50, it tells that there's contraction, there's no expansion or a weak expansion as far as it is below what? Below 50. Once it cross 50, then that is a regrowth and expansion activities improving. But if you look at data we have seen so far and one we're going to spread, if without seeing a change, but for the global data that we are seeing on this global purchasing manager index, we're already seeing that they're going to see a mixed numbers in that regard, and that survey will also help people or investors to know exactly what to do, because we're seeing also different domain. We're seeing that weak currency of this country also determine what to flow into them. But why you see that the people are already jittering, especially the material economy, is because once there's rate hike, we expect to see that fund won't be leaving mature market to the world to the or the developing one. That's why people are already feeling that stock market are already looking red because of that. But for us in Nigeria here, which I want to discuss most also tomorrow with data, that yes, we might not be panicking. We saw what happened when the FTS also downgraded Nigeria in terms of the frontier market, the data. We saw 2 days after that, we'll see a rebound because the fund running the market here is not depending on foreign fund. But yes, we are canvassing for them to come back to Nigeria. But I tell you, the market is depending more on what on local investor. And if the government is taking the bull by the horn, and now that we kind of postponed the MPC meeting for next week, and we'll see at the end of the day, either we're leaving rate unchanged or we'll start having a cut, because you can see what happened in Japan this morning. Japan maintained their rate by remaining negative with all the forecast and also projection that Japan is likely to return, come out from what their kind of deficit monetary policy tight. They are coming back to what they normal. No, they still maintain it, and because they know how they are running the economy, and that is why Japan. I think the last about a month ago, I said that after the end of their Q2, GDP, they are the first economy to return back to about above 6% GDP, and that's what that means it's working for them. That's why you must understand your environment, and that's why this postponement in Nigeria will, let's see what's going to come out at the end of the day. But I believe that monetary policy and the fiscal will really shake hands this time, because we are seeing that they are putting people, technocrats, that they understand each other in this level at the physical and the monetary. At the end of the day, will shake up the hand. But like I just said, that the global purchasing manager index is also what all I should be looking at now, because it comprises of that of US, UK, and also China. And also don't forget that China also left their rate unchanged. And if this the global purchasing manager index come and also start seeing a divergence, that like we start seeing a kind of a coincidence that they're trying to come back, that will, but as the divergence between the manufacturing sector I've said earlier and the service continue, that also should what investors should also look at, and that also easily give you a sign where you should be looking at. From that of US, US, purchasing manager index, we are looking forward to see it, any moment from now, and that was, don't forget that we're already seeing the end of towards the end of August. We're looking at to see what August will look like, September will look like. Sorry, that September will now give us an insight to what we do in the last quarter of the year. Is the purchasing manager index contracting or expanding? With the monetary policy we are seeing that it also hold for this period, which is following that say a hold, we are not feeling it should be a plus for capital market. But the fact that fear of expected rate hike in subsequent meeting has already put the market down. But for me, going into the new week, we expect to see a reversal, because when they start seeing the numbers coming from in terms of Q3, they might change the market number before the November meeting that will come in across the globe, but also with the central bank. That means investors should not panic. The market is pulling back, but just create an opportunity. If the numbers start coming without a positive number, that will also be a plus. Why the purchasing manager index is very, very important now. For you and I, you're supposed to know which sector is doing well, because if you are saying that there's a divergence between the service sector and the manufacturing sector, it gives you a sign. Here in Nigeria, we have seen how the policy of the government have affected the manufacturing sector. Which sector is going to benefit from their policy? That also what we'll also be discussing tomorrow and putting it down with data, so that also guide us to know exactly what to do. As I was saying, as regard the Asia market, before we come back to what is happening in Europe, you can see that the Asia market is already flat, as I said earlier. The regional market there are still also looking down at a lot of what the fear or kind of response or sentiment towards what the topic there that have been disclosed by a lot of the central banks across the globe. That's why they say they are pausing. Even you can see that the statement from Bank of England say that they are likely also to rate hike subsequently, but just a pause we are seeing as a trend. But that doesn't mean that inflation has abated. Inflation is also going to turn around, because we are seeing oil above the $90. That tells you that inflation will also look up, unless the fear of demand and because of weak purchasing power. But as far as weak currency, a strong currency like US, it's going to also affect the commodity market, because that is also what should have at the back of our mind. Like I said, that Bank of Japan offered no change in their in their policy stand, despite that their inflation is also on the rise. Says that they know what they are doing, they know how to check it. I think these are the things that other countries also look at, especially the developing countries to look at. Why China stock continue to look down at a lot of what, even when there is a plan stimulus, the China stock is still here and there. But the good thing is that the investor in that environment understand why the market is going down or oscillating. But I believe that a boost that will come from this kind of intervention might also provide liquidity for stocks also to look up the upper week. But this hour, I think investors are also having a kind of a mixed sentiment for China stock, which is also, for me, not a totally bad one. Like I said yesterday, the Indonesia stocks also are kind of looking up again, despite the central bank of this environment also holding also interest rate as expected on Thursday. This is a plus for them because they didn't also hike their own rate. This is the good thing also. But if you look at the Europe market is still in the red, and it's expected that as all eyes on this global market managers, we know that Germany, which is the major economy in that eurozone, is still struggling. That's why all eyes are seeing that environment. That's why we are seeing a mixed rate hike within that zone. But because of the weak economic activities in Japan and others, all eyes are that to see what the global market manager will not talk about Europe and others. That but as that is on that trend and also reacting to the rate hike. That's why in that zone we are seeing that the ECB hike rate, while Bank of England also unchanged. We saw also Switzerland also Bank of England also unchanged. But I think despite that we are still seeing a mixed sentiment. But right away now the market there is still low. But let's see and see wait and see before the end of the day what will happen in that environment. But if we come back to what is happening in US, US is still mixed and the market, like I said, most of the indices are in green. Despite the market is heading to a weekly drop, but still we are seeing that the futures there, usually look at what is happening. Dan Jones is also unchanged. That's why I say it's missed as we speak at this hour. While S&P is just up but marginally by just 6 points. That's about 0.1, 0.01, and that of Nasdaq is also inching up, with 45 basis points, about 0.3%. Consider that say it's a minimum, but still out of 3, what two that might say that it is up. No, but I believe that also the market there is struggling, and since the outcome of what the MPC meeting, the Fed meeting there in US. But also in UK, we are seeing that the merger between no the merger plan between no no Microsoft and others in that environment. I think the government or UK is likely to approve that as to speak. And don't forget that we are seeing strike across the automobile. From Canada, we are seeing it also in US. We don't know how far it is going to, whether it's going to kind of slow down activities for those industry. And also don't forget that third quarter is around the corner. It's going to affect company operating in that environment. These are the things we also want to look at. This approve or likely endorse this merger will be a good one for that those in that environment. Like I said, that the auto strike will also expand, and also that will likely go beyond Canada and US if not tackled at this time. And we saw oil price rebounding year after Russia has kind of suspend export or reduce export to supply to people they take care of their local consumption in terms of diesel and other related gas issue products that also have pushed up the price of crude oil in the market. As of now, it has rebounded from 92.17 to around 93.67 right away as we speak now in the international market. These are what also, but we are still concerned that as far rate hike is also that might likely slow down consumption of that and the price might not, but there's already a forecast from analysts that this oil price might likely hit $100 before the end of the year. That means in the last quarter of the year, they're also going to guide us if the price continues to go up, what is the next to do? Like here in Nigeria, we are seeing oil price moving up, crude oil in the international market, but we are not seeing price changing here in Nigeria as such. That means whether we are partially also into subsidy again, we can't tell until the regulators or government will tell us exactly what is happening in that regard. Because oil prices, price of petroleum has not changed. The latest, that's what I know. But is that mean that we are going back to the subsidy we just remove, or is there a style we are going to implement it until they let us know? That is where we can comment on it. But for me, the market is already at the third week of September that usher us into the last trading week of uh, September, knowing that this is also the last week for the quarter and also the month might see a reversal. Yes, as we speak now, we're already seeing that the market, NDS here has already pulled back now. If you look at what is happening right away now, we're seeing that the NDS has pulled back below the 68,000 mark. Now, like I said, the market is trading around the 67,285 right away as we speak. No, market is down by almost 985.66. Market is down by negative 1.4 as a result of profit taking, which I've said earlier that the market might likely close no miss today. We're seeing cautious trading already, but I tell you, for those that are in the right stock, don't to panic before you see such a huge drop in index. That means the high cap stocks, which yesterday also part of what led the market down for the last 2 days also is in the red. But as we speak now, the market breadth is negative. We're having 17 losers against 12 gainers. And the top losers is what we want to look at first now. Look at Owando also extending the loss streak for 2 days back to back. Now Owando is doing 11 naira 85 kobo to trade around to trade around 11 naira 85 kobo, down by 1 naira 30 kobo. Also we're seeing Dangote sugar is down from almost 36 something to 334 naira, and that's why we're seeing the market down as we speak again, down by 8.5% in the red. You can see MC Nico is also down by 7.1. Chance profit taking also is still going on, just like what we're experiencing in Wando, but this Chance also still looking down, and also linkage assurance. These are the top losers. But on the gainer side, we'll see that John Holt extended the gaining streak that had yesterday for two back-to-back up, leading by 9.9% up. Lasako also is in the green, reversing the loss recorded yesterday. And the Sooner Assurance also in the green. Godfrey Business Solution and the that communication. These are the top gainers right away. We're not seeing a serious stop. These are local stocks on the gainers this hour. And we're not surprised that the life of Dangote Sugar have thrown the market into a red position. That's why we need to always watch to see what is happening in this market. Is very, very important. Anytime you are trading the market, it gives you an understand exactly what to do so that you know exactly the way to move in the market. That's why I quickly say let's see what the chart is also saying right now as we speak. Because in this kind of market, you must know what the market is saying. Once you're able to get that clip, that means you are good to go because you understand what is happening in the market. Like I was saying, if you look at the activity chart, we saw yesterday that almost 600 something million share was transacted yesterday, and that's why the market posted a huge volume yesterday, about 1.12 billion share was traded. The same trend is what we're seeing also in Universal Insurance. I said that something's happened. Also yesterday saw the price at 23 kobo down today now to 22. Still we're having about 656.7 million share traded so far. Owando 58.1 million share traded. Access Bank back to 16 naira 95 kobo, 17 naira no 17.3 million share traded so far. UPA around 17.15, no 8.2 million share traded so far, and the Transcorp 629 7.6 million share traded so far. This is the update in terms of figures in the market. Right away, we are moving to see what is happening live in the market. Yet, if you look at the charts right away now, you can see that the index is still on a excited motion right there. Right away, you can see you have to look at it. They are trending, but I tell you that the market is already down below the 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 68,000 sacrificial line because of what they lost weakness in Dangote sugar as we speak. That have put the market down below 68. And for me, there's no cause for alarm. That is an individual stock. We have seen the impact below it. That means you need to keep your eyes on the stock. And it's possible that before the market close today, that the stock also rebound. That you also have to trade with this stock with caution. To watch. This will also discourage you from taking your buying decision because we are seeing a pullback. No, the pullback is also creating an opportunity for us to buy into. So that's why I said this pullback or bargain opportunity is for those that are designing, whether trade investors and traders, smart ones to know what to do as we speak now. But I think the market is still on the distribution trade, but with the pullback we are seeing now from other market has entered a decline trade because it's going to show that let's call up the T lines as we speak now to see our indicators to guide us exactly what is happening in the market. Let's call the indicators that we're going to use in this class. Let's call it, yes. MACD, call MACD, call money flow, and also call the T line. Like I said, that moving average, our T line is our resistance and what and support level all time, so that you will know why we always use it. It helps you to see what is happening in the market. This is the position of the market right away now as we speak. But if you look at your histogram, your MACD here now, you can see that there's a sign here. But I will take you back to see MACD in one of the charts I wrote earlier, for the program. You can see this is the MACD at our close of business yesterday. But then MACD is already kind of ascending, up, to cross what call it become a bullish MACD. But at the end of yesterday trade, you can see that he didn't cross over, but he extended almost a flat position here. But if you look at this MACD, line here, the blue one and the red one, I see that the red one has crossed the blue one down, trying to cross it up before, because the two of them are looking the same direction. Until it crossed the blue one up, now that is where you see that this MACD, now for this histogram chart here will now become positive because up here. That's why it's ascending. That momentum was improving, but yesterday we saw that there was a slowdown from what we saw the previous day. For this hour, I think that market has pulled back. Automatically says that we're going to see MACD extending into what into the southward direction, not up. It was looking at because of what we saw that high cap like Dangote has recorded a loss in the price. Put the chart here again is here to reflect that. You can see that I try to refresh this stock to see like they've not captured it in their own chart. But I will tell you that from what we are seeing that the market has pull back below the 60,000. It also has shown us right away on this chart we are using. But I don't know why the chart is still very, very slow. It has not factor in that change in the chart. That's why if not, we are seeing the index below below the T line. But because it's still showing the chart for yes already it has captured it now, you can see it yourself. Yeah, you see that that's why I say the live chart is very good for you to know. I see that your live chart now, you can see that the candlestick is what is below the T line, and this is a sign of weakness. And MACD also, like I show you, as I started looking back, it almost trying to cross up here. Let me show you something that is very important that we know. I show you when almost crossing, but now that we're seeing a pullback, see what we're going to see. I see that there's almost coming to the and now I see that the distance between the two has widened up, and money flow is looking down almost what to 50 from almost 67 yesterday. That as the money flow, because we are seeing this kind of pullback in the market. That was the good thing, that market is still very, very much within the consolidation phase until it breaks down finally become a problem. But as speak now, market is because it's trading below what the T line. But if you really want to look at look at it here now, you can see that the market is still within what the consolidation level. Like I always say, that once you see the market in that level, don't need to panic. You can see here for this level, that's the first one. I also bring that line down. Okay. Okay. It's what I want to achieve. Yeah. Then that is the first one. Then the second one here, you can see it here at this level. That's it. You can see this level, that the red one testing. I see that this is the consolidation level, the consolidation level of rectangle. You can see from here, or this is the resistance, the support level. I see that the red one tested this line here before they're coming back, and this is where also the one tested that coming down. But if you look at it, they are still within that consolidation range. That's not broken out, but it has broken down the T line, which is the blue line here, so that the market is weak. You can see that the market has come to another strong support level here. Once it take away this one and break this one out, that will confirm a full markdown in the market. As we speak now, market is already on the markdown, but when it break out, take out this up one here, that means the 2008 for this time level will now become the next support level that we'll be watching out for. But this was the peak of 2008 2008. You can see it here. Our market are broken it out now to new level. Our market trying to pull back. If not check, or tomorrow, still on Monday, we don't see a rebound or other high cap of trying to take price back. But if it comes to this level and break down, that's when I say yes, another free fall we want to look at. But if not, because we are entering the earning season in October, I don't see it breaking down out of this the support level here. This is what we call a 67, around the 67, okay, around the 66, 66,900 or 67,000 flat. Now, once you take it to take it out, that is where we now but look at it here. This is the resistance that are turning support again now. But after that breakdown, it's a full report. The first one was seeing this range here. Once able to break down this of time, this is like almost the third support level we're going to watch. But let's see how the market close today. For in fact, at the end of the day, this Dangote that was seen as a pullback might also reverse. And the market is still very, very strong, despite it has broken down the T line. Why T line is very important for we traders. As market are breaking down T line now, trade with caution to see the reversal. When you break out with that, means the trend continue. For those that are long-term investors, not just stop you by buying to those that has fundamental and you're expecting something, especially stuff like assets that pull back to below 17 naira. For me, it's a plus for us also to watch that stuff very, very well as we speak. Let's also call up other indicators that are not showing again, so that we now know what we are doing and watch the volume and all those stuff. That's why I call them back again, so that we can continue our discussion. Let's call the volume that were there before. The volume, the volume. Let's call others that are the T line. The T line is there. Let's call our money flow and MACD, other ones. Okay, they are back here. And we'll now remove one of the MACD that we are seeing here. Okay, so remove one of the volume we are seeing here. Yeah, this is this is our position right away now. You can see the line have grown now. You can also see that there is also a departure here. You can see as it was going up here, it has crossed down now. The blue one was connected to focus. It has crossed down to show that you can see the long that I told you about the histogram already looking down now. And money flow is looking down sharply to around 53 point, from around 64, 67 that closed yesterday. That one left the market because of this high cap stock suffering a losses yesterday. MTN, today we are seeing more Dangote. But also I'm going to show you that this is not the time for you to panic at all. But the market is still very, very strong until take away this support level and also take away the 2008 position. That is where we start complaining or start but because anything is around the corner, there's no cause for alarm. You can already see on the 1 hour chart, you can see a strong pullback here and still within the range below the T line. You can see it very clearly here. You can see that MACD is bearish already. You can see the long one on the 1 hour chart. You can see that in the last 1 hour the market has changed. Before we start the class, market was in green, but the last 1 hour it has changed, and that's why you can see it here reflecting on this market. Money flow has gone below 50 basis points on the 1 hour chart. We will look at the 15-minute chart before we also look at the 5 minutes briefly. The same trend, you can see now the same trend we're seeing. We're seeing that market has pulled back, and that is all I will say on the market index. Now we'll now look at the individual stock. You can see it here that market is bearish right away on all the time frame, the short one and the long one. And this is a daily chart. We're looking at 5 minutes, 15 minutes, and 1 hour. That market is what is bearish, and it's not because that the whole thing in the market has gone sour. It's because the high cap stocks also, especially Dangote this morning. And see why I said that the index should not be only the yardstick, but when the index is moving up or moving down, it has the way of putting the other sectorial and individual stock. That's why you look at your index for general market direction. Don't go against the market direction at all. This pullback will reflect, but I know that before the end of trade today, we might see a reduction, in terms of Dangote coming back to gradually. But I believe that as from next week, from the upper month of October, starting the earnings season for today, that will also change the market. And now that we postponed the MPC meeting, let's see what is expected to happen, in the new week by entry. There's no cause for alarm. You can quickly also look at the market on the weekly chart since we're in the class. So just round it up today. you can see that even on the weekly chart, the market is still very strong, but still on that consolidation mode. You can see that in between the line there, I see the market above the T line, even at the volume, but already seen a sign of what? Sign of bearishness. You can see that the histogram on the weekly chart is also trending down. Once it crosses this signal line, become bearish. That means on 1 hour, on or daily and weekly. That's what I tell you earlier. Once you enter the last week of September, we'll be dressing and also positioning for what? For Q3 number. And when the numbers start coming, the second week of October, we will know the market direction. And those stock are hard stock now to start to look up. These are the things we expect in the market. Yes, today we're seeing that now let's look at those stocks that are gaining. But look at the stocks that are going. I said these are penny stocks that are going and that are gaining right away. But let's see what is happening in Lasaco. Let's compare the trend. This is a stock that was down last week. I said last week, yesterday, sorry. And this morning we are seeing it up. Let's see what is taking that stock up to this level. Will it sustain this momentum in Lasaco? Let's see. Let's see if Lasaco will sustain this momentum. We'll see on this chart. This what this a weekly chart for Lasaco. We're seeing it here that the strength. You can see that money flow is looking up around 62. You can see also this histograms are sending up positive, but until the blue one cross, you can see that there's flat on the T line. You can see that on the T line on the weekly chart. But quickly come to the daily chart that we are concerned with because this is a day trade. You can see it here after pulling back. You can see that the green one is coming up. See it here, but money flow is very low. Fund is not entering much as expected. But let's look at the 1 hour chart for the stock. You can see that in 1 hour, almost like 2 hours, you can see it here, but red now again. But you can see that we are seeing a blue quotation and money flow is still very low, below 50, around the 30 on the 1 hour chart. We look at the 15-minute chart so that we can look at other ones before our time is up. Yes, before our time is up. This Owado that is going down is I won't catch a falling knife. Is it the time to jump in? Look at that chart now to conclude. But this is what the 15-minute chart of last time you can see that it's still in red. You can see that also come below the T line. You can see what it's trading now. But let's wait and see. But money flow is looking up around 26 on the 15-minute chart. Saw almost a 1 hour chart around the 30 point, which is also below. Let's keep our finger crossed for Lasaco to see the accurate number. Also, let's look at Owando that is falling. Owando at chance. Is it time for you to buy them right away, or you have to wait to confirm a reversal? Like I said, that you don't catch a falling knife, even the market or what on index, you need to watch very well. But if you quickly look at this stock, it's trading below the T line. You can see it all the way for the almost 15 minutes. But if you look at your MACD telling us is another thing entirely, which we have to keep our finger. If it's coming down, but MACD telling us a sign. Like once this blue one cross this one, that's a sign of bullishness in the stock. But as we speak now, money flow is very low on on 15-minute chart. But if you look at what is happening in the last 1 hour, also tell us. In the last 1 hour, this is where we now know, can see. That's why the stock, you can see that the bearishness is still up as we speak now. But I think that the Owando is still pulling back right away because of what? Because of the bearish nature of people are taking profit. That's why it's below the T line now. And also it's still going down as we speak right away around 57 cents of money flow. This is a 1 hour chart. But the good thing that even at this point now, I'm trying to start trend here. We're seeing a green volume here. That means volume is increasing. But when we look at the a day chart, let's see what is happening. Because for what I've seen, yes, if you look at the pullback now, the stock is still on the T line. It has not broken the T line, and we're seeing a kind of formation it's doing here. If at this end of the day we know exactly what the stock will be, pull back your profit taking, we're seeing it here. So you can see that this MACD is there. That's why it's a lagging indicator. It's still very strong, but looking down gradually. And money flow are moved from almost 100 down to 72 because of all sell-off. We're seeing the stock profit taking activities. Once there's any positive news again, talk about the good thing is that it has not broken down the T line. But let people ask, once you go down the T line next week, that confirm that you have to wait a reconfirmation. But if you get this level and bounce back, that will be good. For those that are in that stock that bought even at the 16 naira or 15 something, yes, it depends on your investment objective. For me, you can see who your position and watch and see whether it's positive news that will come. Finally, let's look at what is happening in charts. Yes, for those that ask for more information on the MACD and the RSI and all that, I think there's already a video according to IT guy on the site. Just go there and click those videos, and also on the Investdata education platform. There are video on those indicators, how to use them appropriately. Go there and watch, and also feel free and ask questions so that we can explain anytime, either in the here or after class, or also at the Q&A section. You can see what is happening. This is a day chart for for chance. I told you, those are this class. I think these are the, like people always send feedback. These are the things we are getting in this class. I told you that on the day that he break out this, that we should watch. That breaking out does not confirm that level, because I break out this resistance level, which is good one. But let's wait for the next day to confirm if we continue on a good volume. But that next day, which was yesterday, we saw it pulling back. So you can see that it's in the board. What it tested the T line, and also, but we can see this candlestick that we are forming here. This is what we call hammer in the technical analysis. If this candlestick remain like this at the end of the market, that shows that this stock might likely rebound any moment from next week. Especially if they post a positive Q3 number, we expect that stock to rebound. But if you cross down the T line, that's also wait to break out, to come back and break it out up before you can also jump in. But I tell you that even the MACD indicator is not looking bad at all. Yes, we can see that money flow is flat around 80, which is still very, very strong. Let's keep our finger on this stock and watch what's going to happen. Let's look at the 1 hour chart to round up the class. 1 hour chart saying that it's still looking down. As the MACD has confirmed it, weak on the 1 hour chart. Money flow, 63. Let us say it's good to look at all these shorter time frame to tell you exactly. But on 15 minutes chart, you can see that we're going to resist a decline. You can see it here in the last 15 minutes. Say no, I don't want to go down again. But and also what I'm seeing in MACD again, if I look at opportunity chart, that's why it's good to look at different time frame. I'm seeing a positive look on the stock. That's why I said once that signal, that candlestick we have seen, the hammer candlestick we have seen on the on the on 1 hour chart. Let me see. Okay, on a day chart, not on the 1 hour. Yeah, on a 1 hour chart, you can see there. It's a good sign. If this is maintained, okay, on a day chart, on a day, this is 1 day. On a day chart, it's a good one. If you sustain this, that means it's still the decline, which is good. That means by next week, like I said, in the month of October, if it does come and beat expectation, it's not likely to also to fly. Let's keep our fingers crossed. On this note, I say thank you. See you on Monday, hopefully by God's grace. Enjoy the rest of your trading day. And also for those that are in Q&A, we look forward to see you tomorrow for us to discuss what is happening globally and locally, and where we should put our tent, or whether we are going to wait. But the market's already at a critical point now. We need to watch to see, are you to jump into the position, or we need to wait. We'll discuss this thing tomorrow, hopefully by God's grace. See you and enjoy the day.